Even stocks going down 10, 20, 30% is not really going to be a catalyst for the Fed to print or other central banks to print.
So do you think that the analysts that are calling for this are just wrong, or maybe on a different time horizon? Like eventually something will break and eventually we will just need a big print, because it seems like over the past decade or so, at some point we go back to QE.
Yeah, it would depend on who we're talking about. But I think basically there are those who just don't follow the financial plumbing very closely. So every kind of downtick in stocks or every kind of downtick, they say, well, we're going to have to print soon. But really, the Fed only cares mainly about the liquidity of the treasury market and the interbank lending market. Even stocks going down 10, 20, 30% is not really going to be a catalyst for the Fed to print or other central banks to print. Now, obviously, if you're the president and that happens, you might want them to print. But as long as basically unemployment's not ticking up, I don't think they're going to be doing massive QE anytime soon. And then even if they do get, if unemployment goes up because of AI, Fed tools are very limited at dealing with that. Now, if Congress decides to pass some $5 trillion, AI
Stimulus
like, basically UBI equivalent, like, oh, robots took your jobs. Well, here's, then sure. But that has to go through Congress. You could absolutely see a $500 billion stimulus or something like that. But again, these are not giant numbers compared to what really moves the needle in terms of balance sheet. The stock market in the US alone is tens of trillions of dollars. So it takes pretty big numbers to really impact things from a macro scale at this point.